Welcome back to Market Day Report. I'm Tony St. James. Well, we roll through your Tuesday morning and we're trading in the markets. Let's go to the corn market. By the way, flash sale reported overnight to Colombia, 110,000 metric tons. Colombia, our fourth biggest trading partner with corn. March, 2.5 lower, 455 and a quarter, 462 and 3/4 on the May. Off 2.5. That's really the first flash sell we've seen this year. Soybeans down 5 1/4 on the front month, 987 1/4, and the March 992 1/4, down 5 1/2. Deferreds are 6 1/4 to 7 cents lower. Soy meal contracts this morning are lower. Soy oil moving higher now. What about the wheat market? Let's go July. Chicago now in positive territory, up 1 1/4, 562 1/4, trying to build on gains from yesterday. And hard red, July up 3 3/4, 573 3/4. And spring wheat, March contract, 594 3/4. That's 2.5 higher. New York is where we trade the cotton market, and the March is 20 points higher, 68.88. The new crop, December 70.01, that's up 11 points. Chris Swift is with Swift Trading. And Chris, great to have you back in the studio. And first off, Happy New Year. But what are you watching on these row crops?
You know, something that we've noticed kind of interesting, we look at the Bloomberg Commodity Index. Commodity prices are on the rise again. Whether or not we see that into the retail inflation or we see it in the CPI, the Consumer Price Index, I'm not as sure. But what I do know is that commodity prices are rising, up about 9% since December 19th, with, of course, energy being a large sector of that, percentage of that index there. And we saw that diesel fuel's up a little over 11% since the 1st of December. So we've got a little bit of commodity inflation coming back here in the first of the year. And while that may be great for those producing it and wanting to market it to it, it's kind of a hamper to the procurement of when we look for input costs. So now we know that grains are a little bit higher. Corn's 40, 50 cents, about 30 cents off of its low. Beans 50, 60 cents off of their lows. Wheat trying to find a bottom somewhere in here, and now we start to see the energy prices move up too. So it's going to be interesting coming in the first year with this bout of inflation. Is it going to be turned or is it going to grow? And we're not real sure yet. But the way the bond market looked this morning with new contract lows, looks like it's going to be pretty persistent for a little while.
Absolutely. You mentioned the energy markets. Let's go to crude oil, and it's traded 4.9% higher year over year, but really the gains have come month over month. Over this time last month, we've seen a 10.5% gain in crude oil. Now, there is some news out there that might be negative for crude involving China. We'll have that for you a little later this morning as I'm still digging that one up. Gasoline futures have been up 7% month over month. And looking at nat gas, you know, Darren Newsom calls this the widowmaker. February is a little lower. The March contract moving higher on a market that's up 38% year over year. How important is it when we're looking at markets, any of these commodity markets, to look at it from the long-term perspective?
Oh, I look at it all the time. I go back in history and see where those price points are, because what we see is at what price do we start to increase the demand aspect of it in the lower prices? Where do we start to find more supplies when we're at the higher end prices? So it's very crucial to look at those highs, and sometimes they're exceeded. We saw cocoa, coffee, cattle all-time new highs. But when we talk about inflation, there is something that is really inflated is cattle and beef prices right now.
All right, so hold that thought. We'll take a break. We'll come back in a moment. We'll talk livestock futures with Chris. Market Day Report continues after this. Last week, we saw cash cattle moving at $195 to $197 in the South. Some reports of even $200 once you look at the over the top. 198 to 201 in the north, and then the dress prices last week, 310 to 317, if I can read my writing there. We've already seen a little bit of cash cattle this week, but packers having to offer more money to get it done. Let's go to the live cattle market, see what futures are doing. Look at that, 195.40 on the front month of February. It's up 20. and 7 cents higher on the April at 197.35. How does that tie back into cash cattle? We'll find out in a moment with Chris Swift. Feeder cattle market, what's happening there? Well, we continue to see gains. January, 25 cents higher, 266.55 a hundredweight, with the March at 266.02. That's up 47. Deferreds are all higher as well. Market that really has been moving higher, well, up until about a month ago, and has started retreating is the hog market. Maybe we found the high here. 79.32 on the February, down 32. April, 85.60. And look out at the June and July contracts. Can't quite even sniff $100 right now, though we did earlier in the week, both of them trading with quite discounts off of that $100 handle. All right, so we've thrown out a bunch of numbers here, and you ended the last section there talking about inflation, and we definitely have seen that in the beef market.
Oh, absolutely. So there's an old adage that says a bull market has to be fed every day. This is a ferocious appetite. It is consuming working capital at a rate as we've never seen, not only just for the cost of the cattle themselves, but the input costs. We mentioned them a little bit earlier. So now we have 8, 9, 10, 11% increases in our input costs, and we've got close to a 21% increase in our cattle prices in about the same time frame. So it leaves no margin, therefore, the cattle feeder, the one actually feeding the cattle, and it leaves very little margin to the packer, if any, right now. And now we're starting to really worry about our grocery and our restaurants. Although grocery sales have been somewhat stupendous through December, we understand that those are the holidays, but restaurants, I'm a little anxious to see when we see how well they performed. Some of the things that I've heard is that the restaurant business is kind of slowing down just a little bit after these last several years of really good times for them.
So I don't think I've asked this question, so I hope it's not a silly one, but when we're in the markets, we have margin calls as well. What does, when we're looking at the prices of live cattle, feeder cattle, futures, what's that mean for somebody when it comes to margin calls? Can you get wrecked real quick?
Oh, absolutely. So really the only aspect of trading futures and options that makes it more better than, not necessarily better, but more friendly than other things is the leverage. And that's what everybody likes about it, because you can control a large amount of product for a very small deposit called a good faith deposit, which is your margin requirement. It states that at any given time, you have enough money to meet the full value of that contract on there. So only putting up a small amount of token money up there for a good faith deposit leaves you still viable for the entire contract size there, or contract value of it. So you have to go back and say, can I fully pay for this entire contract? Because when it comes down to making or taking delivery, especially in live cattle, we still have to actually pony up all the money at the end of the time and write a check for $200,000, $300,000, $400,000, depending on how many cows we bought.
Great explanation. Chris, thanks for coming by. And
always a pleasure.
Not just an explanation of that, but that actually applies to all of our commodities, not just
absolutely.
the livestock
And I'm going to
markets.
mention this. Because I have sat in your seat before there, you're doing a great job. I'm really looking forward to 25 in your first full year here. And I really do have great respect for you, because I know how hard it is sitting in that chair.
Well, the chair is warm when you're ready to come back over. It's Chris Swift with Swift Trading, and that's where we are this morning.
Right, both of you are stupendous. And whoever's in that chair, you guys do a great job.